I have four of the five committee members present now. First item on the agenda, and we have six items, is renewal of flood policies, September 2025 renewal. Mr. Brett Hughes, who is
Mr. Murphy, I'll give
You get it started.
I'll get it started.
Yeah.
We have Mr. Hughes here to answer some questions, as the insurance expert. Couple of key things I wanted to talk about. This is the September renewal, but we have on, some discussion for you guys is also the December renewal. I wanted to bring both of them together for a flood, so y'all can see it all as one full package. There is a change in the flood, insurance mandate, and it comes from FEMA. So FEMA, from the 2016 flood is just closing out all of our PWs, so that's a good thing. We're getting close to the end. It's taken 9 years, but with that comes some requirements in our flood insurance that requires us to have excess flood insurance on the buildings that were flooded. So we've been through a series of meetings, Brett, myself, with my staff, as well as Sonny and Lewis from CSRS. To make sure the FEMA regulations and what came down was exact on those schools that were flooded, because it's gonna require us to have an excess in what it was last year. So, I want to cover that first, and then let you guys know Mr. Hughes went through a layered approach, much similar to our property insurance. Instead of just one carrier, went through multiple layers to be able to get this excess flood insurance, so it's a little different. And he can speak to that point if we need to, but to talk specifically about the 2024 September renewal, we're down 15,000 roughly in that premium amount. So that's good, right? The other portion is we're up 320,000 based on that FEMA requirement that we really have no choice in doing. So I do feel that Mr. Hughes went through some pretty good exercises to get us the best price possible. It is an increase. This is what we talked about also 4 to 5 months ago, 6 months ago, maybe when we went through the property insurance. And we talked about, what we were gonna go through there as far as 20 million, 50 million coverage and 5%, 7%. We knew this was coming, so we kind of talked about, we didn't know what range this would be, anywhere from 3 to 500,000. So it's came back at 320. So if you look at the September renewal, for 2025, it's gonna be 223,000, roughly, and approximately 320 on top of that, for a total of 544,000 total for the September renewal. Now, I wanted to make sure you guys understood also that in December, there's another renewal that comes up for flood insurance, that's 261,000. So that total flood insurance for the whole district is right at about 805,000 approximately. So I didn't want you, going through this approval process for just September without understanding what December was gonna bring. And then, depending on what you guys ask for September, what I'm gonna ask is for a conditional approval in December as well, instead of having a very quick meeting. If it comes back the same or less, conditionally approve us to go ahead and just move forward with it. If not, if it goes up, then we'll come back and have another insurance meeting. So that's kind of where we sit with flood right now. I'll open it up for discussion, Ms. Murphy. Like I said, I got Brett here to answer any of the particular questions you guys might have.
any questions from our member?
I got a question. Did any of our coverages change, the coverage amounts in buildings?
The only coverages that changed from an amount standpoint is some of the excess requirements that FEMA had, we were able to include when we had 5P program. So we didn't have to go to get excess coverage for that. So the buildings may have not been at 500,000 at that point. So we were able to go in on the September renewal as well as a couple of buildings in December. We increased those amounts of coverage in order to meet that FEMA requirement. As far as the coverage amounts on other buildings, those looking at 500,000, those are still the same.
And I know previously we had brought on Prairieville High, that's part of either the September, December renewal as well, right?
That's included.
We did look at contents too and reduce some content stuff depending on what we felt was in the building. Like I think we had one in particular that was very high. We reduced that content amount just because we felt it wasn't perfect.
Just decreasing the content moved the needle very much?
Little.
Yeah, very little. But we do want a whole lot.
Say where we can at this point.
Exactly. Yeah.
Thank you.
Question.
Yes, sir.
So the FEMA requirement that we provide additional coverage, I mean, is that a policy, or is that? Like what, I mean. How does that work?
Yeah, the simplest way to look at it is the most we can get on any one building was say 500,000 doing FIP. FEMA came back and it took them right at 100 years to find us, to get to this point. So we're lucky it's that from the standpoint they didn't finish this 5 years ago, when we had to pay it for the last 4. Well, what they do is they say, okay, we reimbursed you, and let's say it's 500,000, 1.5 million for this particular building. So their requirement is that additional 1 million in coverage that they reimbursed us for from 2016 flood, we have to cover excess on that. If you do not, the next event, they're not going to cover that $1 million. They will only cover if it was anything over the 1.5, which is taken out from 2016. So the money with CSRS, and Jeff and I, and a few others, we've met a couple of times, 2 times on the phone. Sonny did a really good job of coming up with telling us this is how much coverage they're requiring us to have, which was right at 16.9 million, if I remember correctly, for excess. The rest of the excess that was required, we were able to get that with the FIP. So the excess flood is right at 16.9 million total coverage for that 320,000 raise.
Last year, right?
Yeah. Yeah.
It was done.
Yes, y'all do have some backup data by school that shows you the coverage, the building coverage, the deductible, and the contents coverage. You know, you can peruse through that if you like to, and the ones in red, I think, are the FEMA.
Those are the ones that, yeah, the ones that are able to spreadsheet, remember, those are the ones that we have to keep coverage on one wall, sure.
Any more questions? I'd like to, sounds like we need a motion to, approve the September renewal. And and December's if conditional if the numbers are within line with what Mr. Powell and his staff.
And with that, with that September renewal, it needs to include some language to issue the excess flood as well, because we currently do not have that right now. So that's a new policy that we would be writing.
So
That's the
September, well, this is what it, let's see if I can say. We're gonna renew the September renewal. We're going to add an excess renewal flood policy. And we're going to condition our December renewal with staff's approval. Who's gonna make that motion? Thank you, Ms. Bro. And Ms. Bro made a motion, Mr. Lambert a second. Any more discussion? Any opposition? That motion passes. Thank you, Mr. Hughes and Mr. Ball.
Thank y'all.
Glad you can join us, Mr. Lawrence. Second item, overview and renewal of casualty and liability coverage. Warmer. And Mr. Chuck Long and Mr. Tristan Bennett. Who's going to talk about Mr. Chuck? You got it?
Thank you. Appreciate it. Thank you, John and board, for working with this on review for the casualty insurance. That's up for renewal. As you do, you know, I have with you with Andre Como, he's in the Griff, he's a service agent for along, I also have Stephanie Trey, who's our account manager with us. You know, I think Loma has 29 members. Of that membership, they are like the board, and they run the administrative, the Loma program. The treasurer is on the board, she's does a lot of work behind the scenes with the board and everything. This year, because we had a rate increase, we did go to several markets. Liberty Mutual was one that was writing a lot of the school districts, some school districts in Louisiana. We went to them, you know, I think it's in the package, declaration saying that they will not be able to quote because with the program that we in, they couldn't be competitive with that. We also, Mr. Como went to his markets, he's with McGriff, they didn't have any markets that would be competitive or they would consider quoting our program. Higginbotham, who we are associated with also, they write over 500 school districts in, Texas, they were not. None of their companies would come into Louisiana to write the casualty part of the program that we presented tonight. Also, 2 other markets we went to, but none of them were able to compete with what we have. And, Dr. Muse, Patricia, Stephanie and I had, to review it last week. And the proposal is what you have in front of you is what we're suggesting that go with this year. You turn to page 4. You see, the first is your general liability. That's, $3 million of coverage. The APA, which is the average daily attendance, in the school district, went up, by about 450 students this year. With the rate increase, your renewal premium this year is $754,052. That's an increase of about $107,000 from last year. Your automobile liability is, you have 409 power units. And you have 207 leased vehicles. You have a $3 million coverage on that with 25,000 deductibles. That renewal premium is $634,759. The loan board decided to take a bigger risk, and we went up from 200,000 separate pension to 400,000. And they voted on that, so that helped that premium not to go up too much. This is the big thing when we go out to quote the auto liability. As you know, in Louisiana, we have so much with the lawsuits, and it's just a tough market to go to. So that premium again is $634,759. Physical damage, as we all know, we have to carry something. So we go with a minimum of 200,000. I think last year and the year before, we went to the open market. We even went to the leasing companies to get them to quote on it rather than and take it out of the loan program. They came in with premiums of a couple $100,000. We knew the board didn't want to expand, spend any more money than they had to. So we quoted again this year to $200,000 with a $2,500 deductible. Premium is $81,357. We do have 2 options. If you look below, you didn't do it last year. One was for $300,000 of coverage. That would be an additional $29,000. Another one was $400,000. That'd be another additional $56,000.
That's just physical damage.
Yeah, that's just physical damage on your lease bus. The vehicle in vain. I have a bunch of that. Whenever you lease, you have to carry insurance on it. Physical damage. So that's the only one y'all buy it for. Yes, ma'am. Any questions on that? The next one is your educator's legal liability. Again, it's the $3 million coverage. You have maybe the 25,000 deductible. That's based on the number of teachers and the staff. That's $36,693. That increases about $5,000 from last year. The amount of teachers we reported at the time of renewal, and we started working this one in April and May. So we reported 1,690 teachers. There might be a little bit more than that, but that's what we reported at the time to get the renewal in. Because as you understand, if you're part of a program, the 28 schools all share in the losses and the loss ratios and stuff. Any questions?
I have a question
Yes, sir.
about the limits on all of these. That's dictated by this program.
Yes, sir.
They said
We-
3 million.
Well, we selected 3 million a couple of years ago because it used to, some of the people in the program just buy $1 million. We recommended years ago that we go to at least $3 million. So, and so that's what the board decided, maybe, 6 years ago, 7 years ago. And at one point, we couldn't even get that, and then they Long went to the market and was able to get us where we get the $3 million of coverage. That represents, if you look at it, it's about a 15% rate overall increase on all the lines of coverage that we just discussed. Any questions?
Okay, the total cost is this the option of the physical coverage too?
No, well, it's just the one we recommended at $200,000 per purchase, so that's in the total cost.
That's in the total? cost?
Yes, ma'am, of $1,506,860.
Any questions?
If you want, we can go over some of the coverages, it's the same as you've been having last couple of years. If you look on page 5, it gives you a little description of the general liability coverages. I would recommend, make a note of, the board definition includes the board members. This was added a couple of years ago, to give you some coverage for liability if somebody sues or something like that. Also, typical exclusion, trampolines, inflatables, and the fishing club. But what they did, LHSA came out with a market policy for the fishing club. I think they all run through Santamar High School, is that right? And so they buy a special policy for their fishing club through them.
I ain't got no more questions. I need a motion to accept this,
Let me make it. When you make the motion to accept it, I would, it's a little different this year for your uninsured motorists. It used to be, you'd have to, Dr. Walker would have to sign an exclusion. You'd have to give the authorization in the board meeting to sign it. This year, for some reason, the state legislature changed that uninsured motorist form for commercial vehicles only. You don't have to sign it. If they don't quote it and you don't have it on your policy, you don't have it. I would just make a recommendation to the board to go ahead, when you make the motion, to say you reject the uninsured motor. Just so you can have it in the minutes. Okay.
Ms. Bluen has just made a motion for the renewal of casualty and liability, coverage with Loma. And to reject the uninsured motorists. Second.
I'll second.
Ms. Rose second. Any more discussion? Any opposition? That motion passed. We'll put that on the next, both of them next consent agenda. Thank y'all. Don't look like, y'all don't. Three, overview of renewal of drone insurance quote effective 10/7/2025.
This is easy. I don't know if you that's it. It's basically the exact same as last year. You on page 5, you have a $3 million covered. This is for actually 7 drones this year. You wouldn't have you had 6 last year. There's a little slight increase of about I think it was $91 a drone increase. So the increase would have been just 5.46. This year we have an extra drone, because you have 7. So the renewal premium this year with a $3 million coverage. And this is a complicated deal because it's an aviation policy. It's thinking, why does this policy have to cost this much money? That's just the way they classify and we went to market. They all have the same rates, basically. The renewal premium this year is $16,075.
Only question I had, have we ever made it honeymoon?
No, we dropped the physical damage on a couple of years ago, and knock on wood, we never had any claims yet that they did.
I make a motion.
We got a motion to renew our drone coverage by Mr. Langrick, and second by Mr. Francis. Any more discussion? Any opposition? All right, that motion passed. We'll put that on the next consent. Item 4, overview and renewal of cyber insurance quote effective 10/1/2025.
I would just like to say, this department, this IT department has done a fantastic job of getting your rates down and getting you a lot better coverage. When we started 2 years ago, it was, there are a lot of things to add to the program, and they've done an excellent job. We did bring it to some people, with no charge to this week's, so they do serve us, and they help out a lot getting, things in place that we need. And we went ahead and, this year we, and actually added additional coverage, if you look on page 5, the last couple of, bullet points. Or additional coverage since there are so many safeguards in place. And that's not to say something can't happen, but, you know, they've done a great job of implementing all that they can do to safeguard your, systems within this, district. It's, this year, we recommending to go to $5 million, last year had, $3 million. I did a little, research, and the average claim for, a risk this size would be about $3 million. So, and that's what we had last year, so we going to $5 million this year. And the renewal premium is actually the good news for you, is less than what you paid last year. The renewal premium this year is $73,761.98. It's a decrease of about $7,339.
So coverage went up. And the
2 million.
down.
It's not often you saying that in insurance.
I think, I'm sorry.
No, I'm just, in this documentation, I don't see, is it, you add the 70 plus filing fee plus the tax aid.
Yeah, that's,
I heard your number, but
oh, I'm sorry.
it's just not written.
Cool.
Oh, yeah, look at the bottom, it's 70,000 is the base premium,
Yeah.
right below it is 350 fee, which goes to the company. And then the surplus line tax, which goes to the state. It's 34,1190.
I'm thinking I'm hearing the motion from Mr. Francis and second by Ms. Bloom. Any further discussion? Any opposition? One motion passes. Next item.
Thank you.
Thank you.
Thank y'all. Yes, sir.
Like you could keep this on, let's go $2 million. Yeah.
Which one? Oh, that's from the moves it up from the into some of the issues. Which has if they she not that's what we said that everything's out. It's not much. That's to work on. This side. Yeah, Joel and work on that thing. It's 14 million. I think it's working, it's satisfied with these, but. And you know, they all have to show a long last. I think they're still. Have been over the years. Yeah, I was just curious about. That's fine. Any other questions?
Right. Next item, let's see. Group health plan, fixed cost for renewal. We have administration and reinsurance. Mr. Lynn Fontaine and Dr. Jeremy Booth is like the adoption story.
Thank you very much. So we're going here to ask for the approval for 2 policies to continue. The first is, as the chair said, a fixed cost plan, which does include our reinsurance. So I'll turn it over to Tom, Mr. Fontaine, talk about that.
So this is the fixed cost portion of the group health plan, we always know that we're under a partially self-funded plan. 2 items involved in fixed cost, really, administration, which encompasses all of the administrative fees, to process claims, case management, provide a network, all of the other things that are involved in there. And of course, the reinsurance provides us financial protection in the event of a large catastrophic claim. These 2 items are represent less than 7% of the total health cost of your health plan. So there's a small portion of the cost. We went to the market to over 20 carriers. The vast majority of them declined, and they decline when they can't meet either the current or renewal pricing. They were all 60 to 80% over. We actually got 3 quotes in. ISU at 73% over current, Prudential at 65.7, and QBE at 92.3% over your current, premium. So I'll turn to the, page 3. And this is the, spreadsheet. You'll see the $350,000 specific deductible. This is a real important reinsurance coverage that you have. It protects the plan from any large claim. We could have, a multi-million-dollar claimant. I've had claimants over $1 million, but we don't have a multi-million-dollar going on right now, but, at any rate, this coverage is unlimited. It covers any claim incurred in the policy year, that's the 12, and the second number, 24, represents the tail on it. You'll see that we've increased the deductible to $375, and the coverage still has a tail, 3-month tail, with Blue Cross, which is more than sufficient. This was started off at about a 54% increase. We were able to get them down. We had no other competition to leverage them with, but at the lowest one or the closest would being 60 some odd percent over current, but we were able to get them down to the 32 number, not any type of real increase, just a couple of pennies on administration. And that's overall renewal of 15.6%. You'll notice at the bottom, and this is quite important, there is a no new laser provision. Any reinsurance carrier without this provision can come in and say, okay, you have a $350,000 deductible, but on this claimant who's got an ongoing transplant situation or something like that, we might give them a $600,000-700,000 deductible. That's called laser. That's not involved in your contract because we have a provision that they cannot laser. In addition to that, if they couldn't laser, they could bring the premium up to 100%, and an increase. So there's also a cap on it.
Explain the term.
Laser.
Laser is an increased deductible or liability amount on any one individual. What I'm pointing out here is the provisions under your contract do not allow the carrier to laser anybody. Also puts a cap on your rate increase. Without that, in the reinsurance industry right now, you could have a 200% rate increase, so they could come back to you at renewal and say, we want to laser this person $1 million. That can't happen.
What would be an example?
What's that?
What would it be an example of?
So an example of that is a reinsurance contract without that provision that comes up for renewal. That's got a preemie baby situation going on. That baby's still in neonatal ICU. And here comes the renewal for $350,000, and they say that baby has $800,000 something, increases the system's liability. Can't happen under your contract because we have a no new laser provision. You have no lasers right now. Can't have any going forward, and we put a cap on the renewal.
So we do have a few employees whose annual medical expenses go over our organization's deductible.
Right.
If you had a different contract, if you had a different carrier, they could issue a laser. What that means is that the deductible applies to everybody but that person. Because that person's insurance expenses are so high, that person is a very high deductible for your organization.
Right.
And so with this policy, we've been able to negotiate that is, we still do not have lasers. We don't have, the company is allowed to issue 0. They can't identify any single person and provide them with a higher deductible based on our policy.
Good.
Questions?
I have one, Mr. Murphy, if I can.
Yeah. Mr. Newsom.
The total administrative monthly cost, what, I mean, that's as much as the insurance, what does that really go to, is that?
That goes to Blue Cross. And they are administering the plan, they process all of the claims, they do all of the case management. They provide us the network that gives us the discounts with the hospitals and the doctors and all of that, so they're running the plan, and that's their administrative fee.
Wow, so it's pretty much half the cost. Excellent.
That's usually a bigger piece of the fixed cost than the reinsurance is, but also. Both of these items here, reinsurance and administration, total up to be about 7% of the total cost of the claim. Most fully insured, if we were just going straight to a Blue Cross, United, Aetna, Cigna, fixed cost runs about 15 to 20% of the total cost of the claim. So
And yes, sir,
partially self-funded really saving you some money.
you are correct that it's about half. This proposal is for two things. It's for the administrative fees and for the reinsurance. So yes, it is.
And the limits on the reinsurance, you said it's no limit on it? That was. The actual
Yes.
reinsurance, what is the cap, is there a cap on the reinsurance?
It's unlimited.
It's unlimited.
So if we get presented with a member who has a double transplant in the building, $3 million.
Doesn't matter.
Anything over 350, they pay.
Gotcha.
But they not taking care of first 350.
Right.
It's all of anybody.
This is-
It's the one.
Yeah, it's protect the board and your budget.
That's why.
Yes.
I mean, that's why they're,
And the 375 is per individual. Wow. In the past, how many?
We've had as many as 10 go over in plan year, as little as 3.
7 in the past year.
How much did they go over, do you know? And how would we have fared if we wouldn't have had this?
Some of them go over 700,000.
After you.
raised to them, that we don't get a problem with. I mean, when you, like you said,
And say, bring them the
replacement
and
arm. It is aggressive in the sound, just really.
Yeah.
No, I got you, you're not, no, that's good. I think.
So,
Great.
you
And
do have
that in 2 years. I really learned.
Oh, man.
Just to give you an example, you have 2 employees whose medication alone is $50,000 a month.
A month.
So this protects you from those, the reinsurance protects you with that.
And one more question, so we went from 350 to 375. Tell me again, why, how did you do that?
because the premium differential was greater, it was prudent to look at 375, because the drop in premium. We would have to have 8 members go from 350 to 375, not the same.
Back to Mr. Bourgeois' point, where is the right place to draw that line? So that we're not spending too much on reinsurance, but we have enough, and that's
How much
we got
risk
to-
do you want to take?
That's exactly
What
what.
the risk associated.
375 is conservative for a group here, so.
Anybody?
Yes.
Anybody?
Unless you have a question, I say the price.
Thank you, sir.
You need a motion for this to roll forward. Yeah,
I'm sorry, I did have a question. So are we passing this increase on, or are we gonna keep with tradition? Where
It will not be passed on, we will absorb it in our budget.
we're absorbing this in our budget? I would like to make a motion, we'll say.
A motion by Mr. DeFrancis, a second by Mr. Lambert to accept the renewal of the group health plan. Any more questions? Fixed costs. Any other questions? Any opposition? That motion passes. The last item is group retiree Medicare Advantage renewal effective January 1st, 2025. So 2 of you.
Yes, sir, thank you. And so as you mentioned, this is for, I get behind me for that renewal of January 26th. But this is for our retiree insurance.
Thank you, Dan. So this is actually the fully insured, coverage for the retirees Medicare Advantage product. If you remember last year, we had an increase due to, governmental changes. This is the second year of that. That we're being faced with. It should taper off also, I'm gonna remind you that this rate went down for years from years, so. The rate that we're renewing at is still going to be under, I think, where we were in, 2026. So, turning you to page 12. And, these, coverages are quite rich, obviously, only a $15, co-payment for just, a vision visit, and then $10 for physician co-pays for prescription drugs, everything else, no deductible, no out of pocket. Very, very rich coverage. One of the things in the governmental act that,
It is page 4.
That does not match my page 4, everyone's it's. I'm gonna put it.
There you go.
Okay, that, yeah,
I'm sorry.
so,
So,
that's. Alright, hold on a second, sorry, you got more columns than what's up there.
Yeah.
Agree, you got it.
So what page is this?
Yeah.
so, once again, this is all coming from the act, and, that's the, obvious reason for the increase. Market wise, there are not that many markets out there. Of course, we approached all of the different markets. The only market that quoted, besides, your renewal was Humana. Blue Cross also issued a proposal. Blue Cross's proposal was 213% above current rates here. So, we were able to get a very competitive quote from Humana. It allowed us to have, to leverage, United Healthcare down. Their original, renewal was over 40%. We were able to get them down to the 26% here. No real changes in benefits. The out of pocket from CMS is going from 2,000 to 2,100. But this has saved the system a great deal of money, in comparison to, insuring the folks through the self-funded plan. And, increase, is, we looked at different benefit items and whatnot, but this gives us the most bang for the buck.
So. The total renewal. Yes,
Current monthly premium 134,
and then the renewal 169.
169. Okay, 880.
Got it, that's what I wanted to make sure of, what I was looking at. We had a couple of different documents, and the one on here, I'm gonna mention that, I'm gonna always with that. Okay, any questions about this renewal? Get a most. Not really, I know that, yeah, renewal. Got a motion by Ms. Bullen to accept the group retiree Medicare Advantage renewal policy.
Second.
And I got a second by Mr. Francis. Any more questions? Any opposition? Motion carries. Thanks, Lynn and team and Dr. News. Any additional board comments?
Yeah. If you go to the next page, it shows the availability for the retiree. Like with the retiree and spouse, we're covering somewhere between 60 and 80% versus the retiree carrying 20 to 30%. I think that's good. Talk to the public whenever you get asked about this. A lot of retirees look very important to them. That's a good point.
And so Amber, as we got strong on our employees, we don't go up about later. And if we make an increase, if we give $10 to our employees, then we only apply for our retirement. So we try to make a conscious effort, to make sure that we're doing the right things, because they're on a more fixed income, even than our employees.
And How many years, I'm sorry, how many years have we, and I say we, APSB absorbed the health insurance increase?
Last year we took.
Yes.
It was the first time in about
It's been very slight.
$10. $10 a month.
We may change the.
$10 a month, that was about it,
Yeah,
and we absorbed everything.
and that was the only.
That was the first time since 2016.
That's 2016, so almost 10 years we've gone up, 10 up.
And as long as we can keep our community, plants, our tax, I mean, if it keeps where we're at, we hope to be able to do that as long as we can, but stayed right at the beginning, prior to 2016, and there was some tough times, but hopefully with everything that's happening in our community, but we can be able to do that. I need a motion to adjourn. Thank you, a motion